At first, it looked like a case management backlog, a single tax fraud investigation file, opened 7 times over 7 years, closed 7 times, each closure carrying a different administrative justification. Insufficient evidence, statute of limitations proximity, resource reallocation, investigative deprioritization. Each closure signed by the same person. Revenue agent Monica Chen had been reviewing archived case files as part of a routine annual quality control pass on the IRS Criminal Investigation Division's Denver Field Office case management system. She had been a special agent with IRS Criminal Investigation for 9 years. She had reviewed hundreds of case files. Repeated closures were not unusual. Twice, occasionally 3 times, on complex cases with shifting evidence landscapes. 7 times on the same taxpayer entity was not a backlog. She pulled all 7 closure records. The target entity was a commercial real estate holding company registered in Colorado. 7 years of recurring fraud indicators across multiple tax filings, 7 years of investigative initiation, 7 years of administrative closure before any case had reached the stage of formal criminal referral. The 7th closure had been processed 6 weeks earlier. Monica read through the justification memo attached to it. Buried in the supporting documentation was a reference to a financial consulting firm that had been retained by the target entity as part of a compliance demonstration, a standard component of an administrative closure package. The consulting firm's name was Meridian Tax Strategy Partners, LLC. Monica ran the name through the IRS contractor registry, not listed. She ran it through the Colorado Business Registry, registered 4 years earlier. She pulled the principal officer filing. The principal officer of Meridian Tax Strategy Partners, LLC, was listed as a man named Douglas Hale. Douglas Hale was the chief of the IRS Criminal Investigation Division's Rocky Mountain Regional Field Office. He was Monica's supervisor's supervisor. He was the man whose signature appeared on all 7 closures. Monica filed an internal escalation report with the IRS Treasury Inspector General for tax administration at 7:44 p.m. She did not file it through her normal chain of command. By 9 a.m. the following morning, TIGA had transferred the case to the FBI's Public Corruption Unit in Denver. Within 14 days, federal investigators were quietly running a full structural analysis of every IRS criminal investigation case, closure authorized by Douglas Hale across the Rocky Mountain regional territory over the previous 8 years. What they found made the 7-closure file look like the smallest entry on a very long list. Douglas Hale was 56 years old. 20-year IRS criminal investigation veteran, promoted to Rocky Mountain Regional Field Office Chief 8 years earlier, following a nationally recognized career as a financial crimes special agent. 3 IRS Commissioner's Awards. Quoted in federal tax enforcement publications, the kind of official whose testimony before congressional oversight committees was treated as authoritative. His authorization code appeared on the closure records of 1,840 IRS criminal investigation cases across the 8-year window. Analysts pulled the full case population, 1,840 cases, all bearing Hale's closure authorization, spanning Colorado, Wyoming, Utah, Montana, and Idaho. Every case had been administratively closed before reaching formal criminal referral. Every case involved a target entity with documented tax fraud indicators across multiple filing years. Every case had been closed without prosecution, but officers quickly noticed something unusual when they cross-referenced the 1,840 closed cases against a second database. Of the 1,840 entities whose IRS criminal investigations Hale had closed, 847 appeared in active FinCEN suspicious activity report databases, active FBI financial crimes intelligence files, or active DEA bulk cash movement investigations. They had not stopped their fraudulent activity when Hale closed their IRS cases. They had continued operating because closing an IRS criminal investigation removed the most significant enforcement threat they faced, the combined federal tax liability of the 1,840 entities. The amounts they had avoided paying by having their investigations closed before prosecution was estimated at approximately $3.4 billion across the 8-year window. Investigators began tracing the compensation structure that had paid Hale for the closures. The payments did not flow into his accounts directly. They moved through a layered network of shell companies and consulting retainers, registered across Colorado, Nevada, Delaware, and the Cayman Islands, 16 entities in total. The largest of these was Meridian Tax Strategy Partners, LLC, the firm Monica had found in the 7th closure file, but it was only one node in a much larger financial architecture. The architecture was too sophisticated for a field office chief, even a 20-year veteran, to have designed alone. At 3:17 p.m. on the 12th day of the investigation, FBI cyber analysts traced the encrypted coordination channel to a private server registered to a tax policy consulting firm called Alpine Federal Compliance Group, LLC, operating out of a commercial suite in Colorado Springs. Alpine Federal Compliance Group had no federal contractor registration, no GSA listing, no public web presence beyond a minimal contact page, but it had filed corporate paperwork in Delaware 9 years earlier, 12 months before Hale had been promoted to regional field office chief. The registered agent was a name that returned a federal employment record within minutes, Richard Farrow. 63 years old, former deputy chief of IRS criminal investigation at the national headquarters level in Washington. Before that, 16 years as a senior policy analyst at the IRS Criminal Investigation Division, where he had specialized in the design of case management protocols, administrative closure authorization frameworks, and the internal review thresholds that determined when a criminal investigation required escalation versus administrative resolution. Before that, 9 years as an IRS criminal investigation special agent in the Rocky Mountain region and based in Denver. He had served on the internal IRS review committee that established the current administrative closure authorization framework for regional field office chiefs in 2007. He had personally written the policy guidance that defined which closure justifications were permissible at the field office chief level, and which categories of case required mandatory escalation to the National Criminal Referral Pipeline, regardless of regional chief authorization. That policy guidance remained the operative standard across all IRS criminal investigation regional field offices on the evening Monica Chen found the 7th closure. Farrow had retired from federal service 9 years earlier. Within 60 days of his retirement, Alpine Federal Compliance Group had been registered in Delaware. Within 12 months after that, Douglas Hale had been promoted to Rocky Mountain Regional Field Office Chief. Inside the encrypted communications archive, investigators extracted from the Colorado Springs office network. Farrow's designation appeared throughout. His code name was the accountant. A message in the archive dated approximately 3 years into the operation read, "A closed IRS criminal investigation is not an acquittal. It is an administrative decision. Administrative decisions do not generate appeals. Administrative decisions do not generate discovery. A closed file is a clean file. We make files clean." Douglas Hale had made the files clean. Richard Farrow had built the system that defined what clean meant. The situation escalated faster than anyone expected when investigators expanded the financial analysis to trace where the $3.4 billion in protected tax fraud proceeds had gone after Hale's closures had shielded the entities from prosecution. Of the 847 entities that appeared in active federal intelligence databases alongside Hale's closed investigations, financial crime analysts identified 312 that had continued structured financial activity during the period their IRS criminal cases had been closed. The protected proceeds had not simply stayed in bank accounts, they had moved into real estate, into cash-intensive business operations, into cross-border transfer structures, into downstream criminal enterprise funding. Investigators identified connections between the protected entities and active federal investigations in 5 other law enforcement domains: narcotics trafficking networks, weapons distribution operations, organized labor racketeering schemes, healthcare billing fraud networks, and foreign financial sanctions evasion structures. The IRS criminal investigation closures had not merely allowed tax fraud to continue. They had provided operational cover for a broader criminal infrastructure that had used the absence of active federal tax enforcement as a structural shield. At 5:44 p.m., a federal judge in the District of Colorado signed simultaneous search and arrest warrants for 13 locations across Colorado, Utah, and Nevada. At 6:19 p.m., the order went out. Execute. At the IRS Criminal Investigation Rocky Mountain Regional Field Office in Denver, Hale was at his desk when agents entered. Detained without resistance. Inside, 3 laptops, an external hard drive inside a hollowed-out IRS Special Agent Handbook, printed closure summaries with handwritten notations, and $104,000 in cash. At his Cherry Hills Village residence, a floor safe held $810,000 in cash. 13 gold bars, and offshore documentation tied to accounts in the Cayman Islands, Liechtenstein, and Cyprus. At Alpine Federal Compliance Group in Colorado Springs, Farrow was inside when agents arrived. A shredder was running. A rack-mounted server behind a built-in cabinet was active and transmitting. 91% of contents recovered. Farrow did not resist. At Hales Vale Vacation Property, a concealed server, 8 years of backup drives, and a floor compartment holding 7 foreign passports, 4 in different names. 9 additional locations executed simultaneously. By 1:30 a.m., analysts had completed their first full pass through the recovered data. The operation had a name inside the archive: the Clean File. It contained the 8-year case closure schedule, the financial compensation structure for each closure, the shell company ownership map, the offshore consolidation account chart, the downstream criminal enterprise connection map, and a detailed accounting of proceeds allocated to each participant across the full operational window. The IRS Criminal Investigation Rocky Mountain Regional Field Office was placed under direct federal monitoring. The administrative closure authorization pathway for regional field office chiefs was suspended nationwide. An emergency audit of case closure protocols was announced across all IRS Criminal Investigation Regional Field Offices. 37 individuals were in federal custody: Douglas Hale and Richard Farrow. 6 IRS Criminal Investigation Supervisory Agents, 11 shell company directors and financial intermediaries, 7 individuals connected to the protected entity network who had been identified as primary beneficiaries of the closure scheme, 4 banking compliance officers, 8 additional individuals connected to the downstream criminal enterprises that had used the IRS closure protection as operational cover, assets frozen domestically, $290 million, offshore accounts under active legal recovery, an estimated additional $340 million. All 1,840 closed IRS criminal investigation files were referred for mandatory reinstatement review. An emergency audit of administrative closure authorization protocols was announced across all IRS criminal investigation regional field offices nationwide. The detail that stayed with investigators after the arrests was not the $3.4 billion. It was the 7th closure. Richard Farrow had spent 16 years at IRS Criminal Investigation, writing the policy framework that governed when a regional field office chief could close a case administratively and when mandatory escalation was required. He had personally authored the justification categories that Hale had cycled through across 7 consecutive closures of the same entity. He had built Alpine Federal Compliance Group and the operational architecture around the specific gap in that framework: Field Office Chief Administrative Closure Finality, that he had spent his career helping to establish. He had not accounted for a revenue agent who ran a quality control pass on archived files and found a case that had been opened and closed one too many times, and who had noticed in the 7th closure package a consulting firm name that should not have been there. Monica Chen returned to work 2 weeks after the raids. The quality control review she had been running was not a special assignment. It was a routine annual protocol. She had run the same review every year for 9 years. In 8 of those years, the files had looked normal. In the 9th, one hadn't. If a protection network this large, shielding 1,840 entities from IRS criminal prosecution across 8 years, allowing $3.4 billion in tax fraud, proceeds to move freely through the financial system, and providing operational cover for criminal enterprises across 5 separate federal enforcement domains, could operate invisibly inside a regional IRS field office because a field chief's administrative closure authorization was permitted to finalize without mandatory escalation review. How many other case files are being closed tonight by the person they should have investigated?